Hey everyone, welcome back to Corporate Decoder, the place where we decode the often baffling world of corporate filings. Today we're diving into an 8K report from Atossa Therapeutics, a company focused on women's health. And let me tell you, this report is less about groundbreaking discoveries and more about, well, the usual financial juggling act. We are going to focus on what these financial results mean for the company's future. This report is dated March 25, 2025. That's the day Atossa put out a press release about their financial results for the year that ended in December of 2024, so pretty recent. And that press release is what we're digging into today. The main point of this filing is to share their financial results. This includes how much money they made, how much they spent, and overall how the company is doing financially. We will go over the numbers and understand the story behind them. The company has released a press release which contains the information about their financials. Let's dig into the press release itself, which is attached as Exhibit 99.1. Now, before we dive in, there's a little disclaimer here. Basically, the company is saying that this information isn't officially filed in the same way as some other documents. This means they're not taking quite as much legal responsibility for every single word in this particular release, but it's still important information. Alright, let's jump to the heart of the matter, the numbers. Have analysed and prepared these financial data to highlight the key data points for your understanding. We will look at revenue, expenses, cash, and overall financial health. Got it for the year ended December 31, 2024. Here are some key points. Cash position, Atossa ended the year with $113.2 million in cash. This is very important because it indicates that the company has enough resources to continue its operations and research for the time being. Research and development expenses, the company spent $25.5 million on research and development. This shows their commitment to innovation and developing new treatments. General and administrative expenses. These expenses totaled $13.3 million. This covers the cost of running the company, including salaries, office expenses, and legal fees. Net loss. Atossa reported a net loss of $37.1 million. This is typical for many biotech companies that are investing heavily in research and development. The loss is not necessarily alarming, but it's something to watch to see if they can generate revenue and eventually become profitable. Now, let's see what these numbers mean for the company's future and what they tell us about Atossa's overall health too. Alt the story here. Well, Atossa is burning through cash as expected. They are investing in research and development, and that costs money. That's the nature of the biotech world. The key is to have enough cash on hand to keep going until you can get a product approved and start generating revenue. $113.2 of an end, or $113.2 million seems like a pretty decent amount of cash, but it is something to keep an eye on. Now, the last item is just a technical filing detail, so we'll skip that ultimate. So, what's my take on Atossa? Well, Atossa is in a tough but potentially rewarding business. Developing new drugs is risky and expensive, but the payoff can be huge if they succeed. Their strategy is pretty clear. Focus on innovative treatments for women's health, particularly breast cancer. This is an area with a lot of unmet needs, so there's definitely a market for effective new therapies. One of the biggest risks for Atossa, like most biotech companies, is the possibility that their drugs won't get approved. Clinical trials can fail, and even if they succeed, the FDA might not give the green light. That's why it's so important for them to have a solid pipeline of different drugs in development, so they don't have all their eggs in one basket. They also need to manage their cash carefully. Burning through $37.1 million eventually need to raise more capital, either through debt or by selling more stock. That can dilute existing shareholders and put pressure on the stock price. Overall, Atossa is a high-risk, high-reward investment. If they can successfully develop and commercialize their drugs, the stock could go way up. But there's also a real possibility that they'll run into roadblocks and the stock could go down. It really depends on their ability to execute their strategy and get their drugs approved. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment with your thoughts, and subscribe for more corporate deep dives. See you next time.